If you've ever felt like a seal in the sea of crypto being chased and eaten by a killer whale, then you need to watch this video. I had the great opportunity to talk to a young man, super smart cat named Paul Jeffries, who has a passion project that he's been working on that allows us, and it's free, it allows us to spy on the whales in crypto. I think you're really going to enjoy this video. I hope you do. And please watch it all the way through. There are some ways that you can help support these guys and what they're doing and keep this project moving. So I hope you enjoy. Hi, Paul. Nice to finally meet you kind of face to face.
Yeah, indeed. Nice to meet you too, man.
Hey, really liked your project. We talked about it on the last video, and I wanted to get you on to go through what you guys are doing, how it got started, what you see the application, how to use this as a tool for people that are out there investing in some of the main coins, and kind of the future that you see in the whole big picture. First, tell us a little bit about yourself, where you're from, and all of that.
Yeah, sure. So I've bounced around a little bit in life, lived in Europe for a little while. Went to school here in the States, grew up in the Midwest, and now I'm on the East Coast where you are. So I've been a little bit all around. My background is mostly in econ, and now I work in finance for my day job. So I've done a little bit of everything, and then got into crypto actively probably just a year ago. So I guess I'm still pretty new to this in the grand scheme of things. So got in, and then really ramped up probably during the pre-Christmas and then post-Christmas bonanza of last year, and started building things related to crypto probably late 2017, mid 2017, late 2017, and picked it up and came, my intro to finance was a trading background. So, came from regular trading to crypto. I was just like, this is the Wild West over here, and loved it. And just found stuff that I wanted to build. And this is one of those cool things that I guess came from that.
Let's get into looking at it and walk us through, if you could, a couple things.
Yeah.
Walk us through it just in general, how it works or what we're seeing. And then if you could, tell us how you use it. Give us a practical application of how you use it in your trading.
Sure. And I'll open with that. With a little bit, it's a metaphor that I use in the white paper for it. And when I refer to the white paper, I mean the README over here on the GitHub. I use this metaphor somewhere in here. It's very helpful to understand the purpose of the app, right? So imagine that you're at a coffee shop and the owner wants to know more about the trends that are happening within his coffee shop. And so imagine that you are blind and all you can do is hear, but you can't distinguish between people's voices. And you're sitting right next to the cash register. And you see people come up, so what you're hearing throughout the day is, 2 lattes, 3 lattes, 1 iced coffee, yada, yada, yada. What would really catch your attention is if somebody comes through and says, hey, I'm going to have 1,000 lattes, right? You're going to write that down. That's a very odd, rare occurrence, right? That's a coffee whale. And essentially what that is that's your dot. So your single dot here are unit orders between 1 and maybe 3 in some edge cases of actual orders, right? So in this case, you're seeing a 400 ETH order is a sell side order for at the 616.24 price point of 1 unique order, right? So that's something that you would instantly recognize as, oh, this is a coffee whale, or in this case, this is an ETH-USD pairing whale. What is much more difficult to catch as a whale is somebody who comes in and orders 100 lattes 10 times in a sporadic distribution. So gets 100 lattes, gets back in line, waits, buys another 100. And that's what I've dubbed in the white paper a ladder whale. And so when you see these lines here of varying degrees of thickness and color gradient, that is that type of a whale. Someone who is not placing it all in a single order, but who we can inferentially assume is stacking orders at some sort of a predictable range. So we'll go over here to the big one. 3 orders of 200 ETH each at the from this price point, 593, up to 60937, and it's a total of 600 ETH in value. And this is important because there's sort of varying degrees of whales, right? There's the I don't care whale who's going to drop all the volume in a single one. There's someone who's going to try to stratify across a range. And those are the degrees of whales that we want to cover. And the reason that we care about this is, coming from a traditional trading background, crypto is very weird in a bunch of ways. One way is there's an odd ratio of market liquidity to order book thickness, which is kind of odd in that if you go on GDEX right now and you wanted to market sell 10 million of ETH, that would blow through a whole lot more of the order book percentage-wise than it would if you wanted to sell Google stock when the market's open on Monday, right? The order book is less thick, and that's a function of many different things which we won't get into. But so that's one reason to care about whales, because they have a greater degree of impact here than they would in traditional markets. And then the other reason is still you see a market in crypto that is very retail oriented, and there's not a heavy, investor presence from a more traditional background, right? Like the proportion of power held by the Blackstones and the Goldmans of the world is not nearly as big in crypto as it is in the equity markets. So for those reasons, that's the background. We care about these individual orders because on any given day, if, the volume is low enough, a 500 ETH order could kill the day for trading in a particular pairing if it's set. So I'll use this one right here. I'm pretty sure I froze this, but this doesn't matter. I'll unfreeze all just to be sure. And we'll look through what I would think when I open it up. And so you can pick any pairing and do this kind of thing. And just essentially, you want to look for two things that would catch your attention. One would be the size of the orders in terms of their ability to adversely or positively affect the market. And how close they are to the market price. So the way I would generally start my day, if all you have to use is this light version, you won't have to do this when we have the new version out, because we'll also have the curves on it as well. So you'll be able to see exactly what the GDEX order book lines look like. But I would probably today start at the GDEX order book. And if you see a sell wall or a buy wall, that's your first sign that, okay, we should probably go check the crypto app and see what constitutes that wall. And so you should think to yourself, okay, on the GDEX order book, where's the wall? Let's say I see on the GDEX order book there's a sell wall at 600. Okay, I'm going to come in here, I'm going to look at the 600 line on the ETH-USD pairing, and I'm going to try to spot who the big players are. And I'm going to look for the largest dots, which is going to be your largest volume, right? So it doesn't look like there's something crazy happening here in terms of suppression, right now at least. At least if there were a line at 600, I don't see something material here. There's one order for 205 ETH, one for 217. Those are pretty material orders, but they're not large enough that I would call it suppression. So again, this is operating under the hypothetical that I see a wall on GDEX, which there isn't right now.
And maybe, I'm sorry, Paul, just for the people that may be new to trading, you don't need to get in depth, but just give them an idea, a definition of what a sell wall is on the exchange.
Yeah, absolutely. So if you head on over, I'll actually show one over here. So if you pull up GDEX on any given day, you're going to see this guy, which is the GDEX depth chart. And essentially, what this is, without getting too much into it, man, this is an old chart. I wish we were back at 980. Right? So if we go on over here, if you see this line right here, this is a large vertical increase. So the way to read this is the market price here is sitting at 980. The greens are going to be your buy orders. The reds are going to be your sell orders in this case. And so if you hover over on GDEX, anywhere along this curve, there will be a pop-up that says essentially you need to see a amount of volume on either the buy side or the sell side of X amount to get to this point. And the larger the vertical increase, that means the larger the volume needed in dollar volume to move the market price to the right or to the left, depending on how you're reading it. So one way to imagine it is if we're sitting here at, what would that be? That'd be like a high 980s, low 99s in terms of a market price. If the market price were here, and then there were a massive wall over here, you would see a large amount of red shoot up and then some flat. And what that means is if we're sitting at the base of that wall, we have to chew through, by buying through, a whole bunch of sell orders, maybe worth millions of dollars, in order to see that market price budge further. And so that's what a sell wall is. And then you can flip my logic there if you're looking on the sell side. Here, for example, this looks like the beginnings of what you might call a buy wall. It's not really substantial. But essentially, if there was a selling, a bunch of sell side momentum going this way, the market price is moving and moving and moving and moving, and it hits this wall, it has to jump a larger hurdle in terms of dollar volume to keep on pushing that market price down. That's the general concept.
So for the new investor, essentially what you're looking at are support and resistance areas, right, on a chart, right? If you were looking at a traditional chart.
Yeah, exactly. And the tough part is too, when a lot of people are talking about support and resistance, a lot of people are going to use those moving averages. A lot of people are going to look at where the line is teetering out, or where there's a crossover between the short term and the long term. The problem with crypto is you might have resistance, air quotes, or support that comes in and goes away within seconds if it's a whale. And so that's the main purpose here. In fact, you just saw a change in the chart back here. What could happen while we're on the call is there could be a massive red bubble that pops up right at, a little bit above the market price. And that's not something that, what you would anticipate if you're watching the short-term moving averages right before that order's placed. It might look like we're, nowhere near resistance. And then out of nowhere, a whale drops a 2,000 ETH order, and the order book just comes to a screeching halt because of the wall. And so that's what we're trying to spot here. So really, the first thing I look for when I open this is, are there any large bubbles sitting on either side of this line? And so, for example, if this bubble right here were a little bit higher up towards the market price, and we're sitting right below it, that's, to me, is looking like a whale that's trying to push that market price up a little bit. What begins to become concerning is if something like this order or something like this order over here, if they sit underneath the market price goes up, and then say it follows, and you can very clearly see a buyer moving their order up and up and up. That can be a great thing. That can be the case of somebody who, in weird circumstances, is trying to push the market price up to hit their own sells. Then they drop that support all of a sudden and hope that the rest of their cells get eaten. So that's just something you have to figure out.
Trying to create traps.
Yeah, exactly. You see that all the time. But the problem is you can't see that on the GDAX order book. And that's really the premise of this app is, if you see a sell wall, all you see, or a buy wall, is you see a massive wall. And that wall could be 100 people who have all agreed for some reason that the price it should not go over 600. Or it could be one single person who just does not want the price to get over 600, or he's trying to offload a bunch of risk, and that's his exit point. Yeah, so that's the thing, is that GDAX does not allow you, if you pull up the wall or the image that you would have on GDAX of the order book here, if you see a massive wall, you as a trader cannot know what the composition of that wall is. And when you come on over here, now you can. Now you can see the number of distinct orders that make up that wall. And you can think to yourself, is it worth it for me to, buy here or sell here, depending on the composition of that wall? And to give you a real-time way that I might make a decision about that, let's see if there's, anything in here that looks like a juicy type of market manipulation at all today. Hopefully not, because that's always pretty sad.
Right.
I don't think any of... Okay, so maybe. This guy's probably our biggest candidate. Oh, here we go. No, still not anything, Matt. Okay, yeah, let's go with this as the example. So this is ETH Euro, right? It's not the the most popular trading pair in terms of what gets love. But this is, I'll use this and then shape the hypothetical to show you what I might look for. If this right here were, say, 10 times larger in terms of order size, maybe it was a high volume day, and you spot a 1,000 ETH order that's tracking market price. And in this case, this is sitting only $2 below market price. So in this case, if this were 10 times larger, this alone, assuming you can't see anything above here, right? This alone, a massive order that's tracking below market price, as long as I am watching this for a few minutes, I have the refresh on, and I don't also see smaller orders appearing and then disappearing on the other side of the market price, that to me is a sign that the whale's pushing traps and trying to trap people into some sell side volume on the top end. This would be a good sign for me as someone who's looking to get into some buy positions today in ETH Euro. Because what this means is you've got a whale with a lot of volume here who is pushing up the market price and who's supporting it, because you see this order, and the second market price moves up, he brings his order and moves it up to position the order a few dollars below market price. So that looks like a whale who is very intent on getting into the market, and he's trying to play every marginal downswing possible so that when the market price moves down a little bit, he picks up a lot more volume. And then when it moves down a little bit more, he picks up a lot more volume. So that looks like someone who's trying to unload risk in this case, and a large amount of it. The best case scenario is not just when you have one guy doing it, but when you have multiple large whales who are doing it. So if we come in here and we see maybe 3 distinct orders of 1,000 ETH that are tracking below the market price, that is the sign to me that there are multiple large actors who are short-term bullish on the pairing, trying to get into the pairing on any marginal downswing. This is particularly good on low volume days, where they're picking up every time the market price moves down a little bit, they're eating into those stacked buy orders. And what this would look like on the GDAX side is just a massive buy wall that's periodically moving up and up and up and up as the market price moves up. And you can dissect that, right? Then let's maybe take the opposite end of what would be a good buy wall. You would see the same thing on GDAX. You would see a buy wall right below market price, and you're thinking to yourself, oh, this is a great day to trade. You open up the crypto app and you see there's only one massive order that's below market price, but you notice that it's disappearing every 10 seconds. And so what that looks like is a whale that's spoofing, and he's trying to spoof some folks into hitting his sell orders. And if I'm a whale with a couple $1 million in risk that I'm looking to offload, that's exactly what I would do. I would stack some moderately large sell orders above the market price at an exit point where I'm comfortable with the rate at which I'm offloading risk. And I would come in and I would put a massive buy wall right below the market price so it doesn't get eaten too quickly, but still close enough to the market price that people on Reddit are going to type, oh my gosh, do you see the huge buy wall on ETH/USD or whatever? And the second that it gets close to being eaten, I pull it. And then when we start to see market price move back up a little again, I reinstall it, I track, and then this is very easy to do if you're someone that, trades algorithmically. You just look at the spread between the position of your order and the market price, and when that number gets too small, which means we're getting closer to hitting your buy order, you drop the buy order. And that's an example of a spoofing whale. And I throw those two examples out there because both look identical on GDAX. It is impossible to discern between the two. But if you use something like the crypto app here, you'll be able to discern whether or not these are, happy bulls and whale bulls, or if this is just somebody who is really trying to offload a large amount of risk and trying to spoof you into buying his risk.
So Paul, as we look at this example, you've got that sell order right above.
Yeah.
Is that the same amount, 17554? What was the one below? Okay. Mm-hmm. So now your interpretation of this action that's going on right now, since you've got basically the same buy and sell, right?
Yeah. So that's another sign. This is abnormally sketchy. So what's very bizarre here is that this guy isn't being pulled. So there's a scale of how benign a particular action could be, even if it looks sketchy. We haven't seen a large enough degree in the price movement here for me to be able to say definitively that this is somebody who's trying to spoof into offloading some risk. But what would be the tell here is you would see that the the volume's identical. That's a great first tell. Then your logical next question is, I need to see market price move one direction or the other, and I need to see how that particular order reacts. So say 50732 on the euro pairing drops to this 504. As it approaches 504, say market price drops 2 euros, does this dot right here drop at all? Does it migrate down a few euros? That's a bad sign. An even worse sign would be if this particular dot just disappears entirely. That's just a lazy manipulating whale. And then, there are edge cases where things can just be, people can act irrationally, and maybe this isn't an instance of spoofing into a sell. But you have to watch this a little longer to see what happens. But given this pairing, that's what I'd watch for. See which direction it moves. If it moves up and then eats into the sell, That's another bad sign because that could be someone offloading risk. But if it moves up even more and then this gets pulled, then maybe it's a mistake of some sort and there was another story behind it. But this is a perfect example of something that when you open this up, you should mark immediately and watch for about 5 to 10 minutes to see if something substantial happens.
And that's why I'm so excited about this project that you've got going on here, Paul. And I'm hoping that people get more involved with it because this provides a level of transparency that we just don't have anywhere else. I mean, there's just, to your point, you look at sell and buy walls on an exchange and you have no idea what's causing that. This gives us another level to look at. And just another tool. I think it's phenomenal. I mean, that you did it, the initial idea in 20 hours is unbelievable, especially not being a programmer. But besides putting up the graph of the cell wall to overlay, what are the next things that you want to add to this project?
Yeah, I think that's a great question. So there are sort of 3 degrees of, or 3 buckets that I would put the work that I'd like to do more of squarely into. And they have to do with the closeness to the original app itself. So first degree, highest priority is getting that second version, the heavy version, trimmed down in terms of the amount of CPU it eats, how costly it would be to host, and finding a sustainable, long-term, cheap solution for that hosting so that we can promise the community that this will be available with very little, if any, downtime for years. That's the long-term vision. And so that requires, speeding up the present version, ironing out the kinks of the computations. Hopefully some people with more web development knowledge can chip in some help there, and the donations are key there as well. The second degree of improvements is just sort of the really increasing what we do with the app. So right now we hit GDAX. It's the only one we hit. GDAX is by no means the end-all be-all of all the exchanges out there. In fact, over my time trading, it's actually not... It's decreased a little bit in its importance because other exchanges have grown in prominence. GDAX is great in terms of how easily you can hit their data, but there are other exchanges out there that also would allow us to hit their data. It just takes more work and is a little bit of a newer process. So long term, we would really love to be able to add exchanges to this and parameterize it. So if you're somebody who, trades on Binance, for example, you can just come in and click a parameter and say, I don't want to see GDAX's order book. I want to see the order book I care about. And then we build these plots for you. That's all associated with this. Then, a couple months ago, I started a Reddit post where I essentially said, I've noticed some things personally, trading and in building this app, that are hypotheses that I want to test using some econometrics, which is really, what I would be better at than web development. And we sourced a list of questions that you can see under the Issues tab of this project on GitHub, which are questions that you can ask of the type, is it true that market price generally does this on a Friday and then you see this on a Saturday and this on a Sunday, right? Anything from that to, determining what sort of an effect McAfee's tweets have on price action, right? Things like that. Anything you might want to ask about crypto that we can answer with some statistics, some econometrics, or even some machine learning techniques. And that we're going to build out into a separate repository that we'll just write mini white papers and try to either debunk or prove the viability of certain theories.
Wow.
And so that's going to be about a 6-month long project, I'd anticipate, probably a little bit longer. And you can see that beginning to grow under the Issues tab here. And I'll put out a new repository for that in the month, probably next month. And then the other component is just random questions or features that I want to be able to build that are a little bit lower effort than this long term of a project, but are still helpful. So one example that I know I shared with you earlier on is I built a little while ago this thing called the Asset Comparison Toolbox. And so this is a different project, entirely different coding language. But what this does is it allows you to pick certain assets and to look at their performance over time and to change how you think of, the relative importance of risk and variance and, look at your historic investments and check if they were good or not. And you define good. So, the idea for this one was I saw a Reddit post where somebody said, I bought ETH Classic instead of Bitcoin, and it was a way better decision. And then everyone in the comments was, you're an idiot. You should have bought this. You should have bought this. I want this tool to sort of end those conversations. And it's built so that we can finally break the traditional investing boundary with the crypto investing boundary. And I'm tired of people that think that they're two separate spaces. I think we should be able to compare them. So if you want to come in here and compare what you're seeing right now, which is an investment in Ethereum to an investment in Amazon, you can do that. You can plug in your date ranges of interest, your investment amounts, and then the more interesting stuff is you can look at your returns relative to the risk inherent in those investments, right? So you can choose a risk-free rate, which a lot of the finance folks in your audience will appreciate. And I really want to build something like this, for an example, so that people realize that investing is not just the rate of return at the end of it, it's the journey that you take to get there. It's the variance of that asset. It's the stress of waking up each morning knowing you're 40% in the hole. So
which we've all experienced
a lot of
recently.
people have. Yeah, exactly, right? Like if you look at this guy, right? Say you got in January or February, right? Say you got in January 15th in ETH, you went long with a massive position. You feel terrible, probably, right? Unless you've offloaded some risk or you've diversified, right? But I want people to be able to say, oh, 6 months ago I made a decision to invest in Bitcoin. I could have put that money in, Netflix stock. Sure, maybe I made a bigger gain, but did I make a bigger gain when I account for the variance of that price and the stress that I went through? And so something like this enables people to look through and actually put those assumptions on paper. And I think that's a really healthy thing to do if you want to be an informed investor. So again, this is another side project, but if you, and this is my number one recommendation.
Is it up yet?
It is up yet. It is.
It is. Okay,
Yeah.
so let's just tell people how to get there, because this is the first time seeing it, so it's great.
Sure. So if you go to my personal GitHub, which is right here, and we can throw this somewhere so it's easy.
I'll put a link in the bottom. Yeah.
Yeah. You can see the top two projects here. This one is the whale watching app, and this is the financial asset comparison tool. So this one is hosted. There's a address right here where you can hit it live. It's also very easy to host. And like with my the crypto app, I've written a white paper for it that tells you how to interpret it. So even if your audience has no idea what I mean when I say variance or even rate of return, I walk people through very explicitly why we need certain metrics, why some are more complicated than others, how to read them, and how to understand what it means for there to be a trade-off between profitability and variability. And so I recommend, as the takeaway from this video, read both of the READMEs. They're sort of like white papers, but they don't read like technical manuals because I hate reading those. And it'll take 20 minutes of people's time. Yeah, exactly. So that's, again, to put a finer point on it, that's the third category of things that we're working on, is just random projects where I see something either in an investor channel or a Reddit subthread that either irks me or that I believe is a simple enough question that I can knock it out in a couple weeks worth of time. And so this is the newest iteration of that, but there will be more projects like this to come.
I got to tell you, man, I'm blown away. I'm so blown away. I think it's great, that you're doing these types of projects. There's no cost. We didn't make that clear in the beginning. It doesn't cost anybody anything other than, I'd love for them to donate to the cause, and or if somebody has a VPS that they could donate to host your stuff on, that'd be great too. Whatever, right? Yeah. But what you're doing is great for the community, and I'm just blown away. I am just totally blown away.
Awesome. Thank you, man. That's the reaction we're hoping for. And my promise to the community in general is I will never build anything with an associated necessary cost. Because I think that's a barrier to entry in a very information poor economy. And so, with all of these different things, like, sure, it costs some things to host them in the web version, but if all money dried up tomorrow, this would still be something that everyone in the audience with 5 minutes worth of reading and the READMEs could host on their own with just open source software and 2 lines of command line code. And we're never going to go beyond that.
Well, you've got me so blown away. I think we should do our own token release. Build a smart contract, get some financing, and get going.
Yeah, we can shill our own coin. It'll be great. Oh, yeah. If that ever happens, man, you need to come correct me, because that's the sign that it's it's all gone too far.
Well, gosh, I appreciate your time more than you can believe. I do think we'll do a follow-up. Once you get the 2.0 out, I'd love to get a follow-up and have you do a little seminar on that version,
Sure.
and we'll walk through, exactly kind of like, hey, just like you said, I wake up in the morning, here's what I'm looking at.
Yeah.
Let's dissect this thing and see what's going on.
Absolutely. And if anybody in your audience has questions, head on over to the respective GitHub and use the Issues tab, open up an issue. I read every user request within a week.
Yes, you do.
Maximum.
You responded to mine. I appreciate it.
Absolutely, man. And yeah, so just read, head on over, read the white papers, and let me know if you guys have, questions, complaints. You hate the colors. We've had some weird requests, but I read them all.
I mean, you said you've got a day job. The donations are going to hosting. This isn't a big money grab for you, right?
Yeah, that's correct. And we haven't raised more than, I think, to date, probably like 200 and some change is what we've raised. And so, we're not jumping for a massive cash grab here. It will all go towards the hosting of it. So to give you an idea of costs right now, the present version that's hosted, this version right here, only costs in the light version $10 base for the hosting per month, plus an additional, I believe it's 10 cents per unit of memory that you exceed on the cap, which because of the nature of this app we're going to. So I chalk it up to about $20 bare minimum for what I'm calling the bare bones one per month. So that $200, right, is going to last us a long time. It's not like we need thousands to keep it afloat. And the other portion of the money goes towards testing it in environments that would be more expensive, but we think a little bit easier. So one example is I ran the new version up on an AWS test earlier, and just testing it for a couple of hours when you're messing around with some of the parameters can cost like $40 if you're testing it for a month. If you're testing it to walk it out to a month's of length and you're trying to push the boundaries of what CPU would be allowable, depending on how you configure the settings, it can cost that much for just a one-off test. But that's a rare occurrence, right? So we've been really conservative with how we're spending the money. So I think of the money that's been brought in, only 50 has been, air quotes, spent on either development or hosting. So we have a nice reserve, that this will not go down anytime soon. I think right now we'll be up for at least 6 months with the light version. And if more people donate, then hopefully we can either move faster to the 2.0 version or sustain the longevity of this even longer. And we will eventually also have to purchase a domain because this is one that's currently being donated by one of the people that has most contributed to this. And if people have been around this project for a little while, they'll know the great username of Crypto Crack Lord. That guy is the one that was responsible for hosting the original web version, and he's also the one that has this. But if there's a second crypto boom, he might want to sell this particular domain name, and we got to go get another one.
Okay. What's the timeline looking like on the 2.0, if you will?
Yeah, on the 2.0, there's a trade-off involved between the cost of potentially putting it up as is now, in terms of like hypothetically speaking, if you have a very computationally intensive app, you could host it. You're just gonna have to pay a lot of money because it's gonna eat up CPU like crazy. It's gonna burn through memory, right? So we could take the money that we have left from donations and try to host this thing. Like I could probably go host this thing on the new one on AWS today, but it would burn through all the money very quickly. And so it's about being a good steward of any of the donations that come in for the hosting fees. So I'm hesitant to move it over until we're certain that it won't eat through the cost of hosting it at a rate more than 2 times the present version, right? So I would say, conservative estimate, maybe about a month until we can nail down the 2.0 version hosted live. But yeah, I mean, if it gets to a certain point where either, somebody comes along and drops $10,000, we're like, sure, we'll buy an AWS node right now. That would be no problem at all. But I think maybe 1 month, barring no other people jumping in to help out on the coding side, would be the correct estimate. And we're going to keep people apprised of all the updates too, by updating the GitHub. And I post in the Reddit subthreads pretty often as well.
Just to wrap this thing up, is there anything else that you want to talk about that we missed? Or
no, I just I encourage the folks to read the two READMEs and be educated about it, because I think as of the past couple months in particular, I've seen more market manipulation than I have in a long time. And I think that's a function of retail exhaustion, of a weird space where volumes are going lower, sort of the hotness, the post-Christmas hotness of cryptos died down. And the lower the volume and the less institutional engagement that we have and the more retail exhaustion we have, the more people can be taken advantage of. And the worst thing that could happen to people is they make a technically good trade and they get wiped out by some form of manipulation. So I just encourage your readers to do their research on whatever they're buying, and if they're new to it, because you mentioned a lot of your readers are new, a lot of folks that are entering the space, don't invest more that you can lose. And if you feel uncomfortable at night with what you're holding, then that's a sign that you should change your positions in some way. So that's just my global disclaimer on all things crypto, I think.
No, that's good advice. Absolutely. You brought something up as you look at it. So we just started to make a little bit of a run today in both Ethereum and Bitcoin. Anything that you saw in the whale watching that you want to give some insight on, or do you think it's all just natural? Organic?
There's been some weird occurrence in terms of just whale activity in general. There was a lot of large single buyers that were playing around the past couple of days, abnormally so, but nothing to where I would call it an entirely whale-driven market boom. And the reason for that is just when you see a large amount of whale activity, a lot of times it could just be a sign of high volume. And the only time when it's either an issue of suppression or of an artificial pump is when you can see instances of that back and forth trade-off between, a lot of activity on the buy side and then moving orders on the sell side, or the converse of that. So in general, there's been nothing that I would call abnormal. I just think that we're in a weird sort of interstitial space in the market right now between major news events. I know a lot of folks personally that are closer to the institutional side of it that are waiting on various legal outcomes or regulatory outcomes before the money moves in. And I think that what you're seeing right now is probably a lot of folks unloading some risk in the anticipation of hopefully some positive regulatory or legal outcomes for the space. And just a little bit of maybe the tail end of some retail exhaustion as well. Mm-hmm. But I'm personally very keen on waiting to see what sort of moves, if any, the SEC is going to make. I think the classification of crypto and tokens in particular is going to be massively important. And I think that hopefully that will come soon, because we desperately need some certainty. And I think the other thing too is either direction, right? If I'm the SEC, if you ask Reddit, if Bitcoin or Ethereum in particular, so if those tokens were to be qualified as securities, Reddit would say, oh, it's the end of the world, the market's, done, sell everything. That's not true. Either way, something good long-term can still happen if the technology is viable, right? All that would mean is we can list faster on major stock exchanges. It's a faster path to ETFs if you're a security. So there'd be a short-term hit and a long-term gain. The commodity route is an entirely different story. So I think people are putting too much stock in the outcome of the classification and of some legal certainty in the crypto space, and not enough stock in the good outcome of just having certainty, which is all people really care about.
Yeah, I totally agreed. All right, so we'll wrap this thing up, and thank you once again. It was really nice meeting you and talking to you.
Yeah, you too, man. Absolutely.
All right, Paul. Bye-bye.
See ya.
Well, thanks for watching. And obviously, you can help out by supporting this project with a contribution, but you can also go to GitHub and hit the star button on the projects. I've got the images below to show you where they're at. That allows them to get tagged on various searches and trends on the site, which can attract some developers who might want to help out on the project. And of course, like this video so that it gets circulated around to some more folks. That would really help out. Also, subscribe and hit alerts so that you know when more projects like this come up. Follow us on altcoinbuzz.io, where you can get to all of our social media and see all of the information and places that you can get to. Until next time, may all your trades be good trades.